anyone who joins crypto, within a few days, within a few weeks, you start feeling you're a part of the kite. So once you enter crypto, it's a kite and everyone is welcoming. But if you want to ensure that, you are the person or you are the project that helps create this, turns this around from crypto is gambling to crypto is sensible investment, you have to do the hard things. And the hard things are someone who's coming to crypto, you give them the right mindset, you give them the right advice, you channel them in the correct direction.
Hey guys, how's it going? I'm Rohit and I'm the host of the Strategy Podcast. I've been doing this podcast for now over 4 years, and there's only one mission with the podcast. It is to share stories of founders building at the cutting edge of technology. Now, technology trends have evolved in the last 4 years, and crypto and blockchain has really taken center stage. And to talk more about the evolution of this industry, I have with me Abhishek Yadav, the founder of Clamp. Hey Abhishek, how's it going, sir?
Hello, Rohit. Doing good, yeah. Thanks for inviting me. Appreciate it.
Yeah, awesome.
We try to talk something frankly about crypto.
Yes, totally. So first up, crypto is in a bull market. Everybody is pumped up and excited. I was reading all of these Twitter posts about ETH Denver, and initially there were mixed signals, but I think by the end of the conference, everybody was like dope excited about it. So first up, what are your thoughts about this new bull market? Are you excited? And what do you see around in the community?
I think, if you generally look at the trends that we play out in crypto, one of the things we've always seen is when prices rise, there is interest. You have your friends who you've not spoken to in a couple years, they start texting you, hey, which crypto to buy? Suddenly, some distant relative will call you and ask you, Acha, are you still into crypto? Oh, I thought you stopped crypto. So generally, when these things happen, that's when we know, Acha, okay, this time we started reaching more people back again, and it's that same thing repeating again. So I think, for builders, I've seen this for builders, it does not affect, whether it's a bull market, bear market, builders are doing the work. Especially, I heard this advice way back in 1819, and it is still true. Most of the actual work happens in a bear market. That's why, your builders are actually focused because if they do not have to look at the price chart, the decisions that a project makes is independent of whatever the price movement is. That's when they can take the correct decisions. So, of course, bull markets, we get more users, high user interest. We roll out much better products to them.
Yeah, awesome. I totally agree because there's just so much noise when it comes to a bull market. It's hard to decipher, who is really building cool stuff versus who's just here to, make a quick buck.
Absolutely.
And, that's exactly, it's also true that most of the new users join crypto when it's a bull market because that's when you have the most noise. I myself am a bull market, joined into crypto. I joined in 2021 when it was at the height of peak of the bull market. And I think NFTs were all the rage back then. And I was like, man, what the heck is going on? How do I make money with all of this? I didn't even think back in the day that, I want to work in this space. But I mean, that just drove me in. So it's the excitement that drives you in, but then you realize there's more to it than pump and dump that lets you stick around.
I think,
isn't it?
one of the things is also that anyone who joins crypto, within a few days, within a few weeks, you start feeling you're a part of the kite. And this kite has no boundaries. It's not like there is any differentiation, your differentiation on any basis of country, this, that, nothing. But once you enter crypto, it's a kite and everyone is welcoming, despite, even if you don't know anything, fine. You're not an engineer, fine. You'll work on something non-tech, absolutely works. So everyone finds a home in crypto. This doesn't happen in Web2. If you don't know something, people will take you out. Okay, you can't join this cult. You can't be a part of this community. You come to Web3, even if you don't have a single skill set, even if you don't do anything, the least you can do is DJing.
It's just the doors are always open.
You can be a reply guy. If you can do DJing tweets, you find yourself in crypto.
True that. Okay. So with the strategy podcast, our aim is to unravel the stories of founders, right? What it takes to build and scale a startup, especially in crypto. It's very confusing for not just average normies, people who are core end users, but also for a lot of builders who are, who are very comfortable with Web 2 because it's been around for what, 30, 40 years now. But with Web 3, we're still seeing many of them are coming to terms with what is possible. So, I want to dive into your story, Abhishek, because now you've been in this space for almost 6, 7 years and you've seen a lot of ups and downs, many cycles. So, for an evolving builder, what would be your message? How should he look at the crypto market? And if he is looking to build a product, what's a good way to start thinking about the problems that blockchain and crypto can solve? Um, and, start that journey.
So I think, if you're a new builder who's, very early into your crypto journey, you're still starting out. One of the few things you have to do, I feel, is you have to experiment a lot. Experiment in the sense, it could not just be building products or, trying to do something, but just experiment with, whatever things we have available right now. So when I got started into crypto in 2016, I remember, my original introduction to crypto was the Ethereum DAO hack. That's my original introduction to Ethereum. That for the first time, I heard something like Ethereum existed, and there was a big hack that happened. Then later, I met my best friend a few weeks later, and apparently he was already before into crypto. So I booked with him, and he gave me a few pointers here and there. How do you get started? So my journey started as okay. He was doing some shadow content writing. I decided to join him to become a shadow content writer. And I was, I think, in my first or second year of engineering. So very, very early, first, second year of engineering is like, you've not even started picking up C++ or Python, anything correctly yet. And the first intro I had was, okay, this is crypto. This is a good part. You start reading and you're getting fantasized by it and you start it. Now, when I look at it, I see that, you have a lot of chains. First of all, I think when I started, you only had Ethereum, Bitcoin, and Ripple. Ripple was, it was very nice back then, and people used to build a lot of hype around Ripple. So you didn't have a lot of networks changed, not much of it. You was just basically Ethereum. Then you have applications of DeFi built on top of it. Again, very early, and you had this space where you could imagine. But for someone who's starting out now, what they have to look is, Acha, if I have this, if I have this sort of setup right now, I have Ethereum, I have Polygon, I have Solana. Now I have a very big universe. So what exactly is the value proposition where I can see myself adding into? And very important thing, you might not want to become a builder on day zero. If you make this mistake that you do not have enough domain knowledge, you just started building stuff and you try to say, okay, I want to build out a full-fledged product and let's take it to market. You might succeed, but the chances of success there are far less. So as a founder, what you might want to do is you might want to increase your odds of success. How you can increase your odds of success? Okay, I make rational decisions. Okay, if I'm building something, is there a product gap there? What is the value addition that I can bring as a founder? Do I have some domain expertise in this? Then if I'm a founder, am I a technical founder? Am I a non-tech founder? I'm an engineer. So a few of things are easier for me. Something in non-tech might be more difficult for me. So then you have to sort of sit down, understand, okay, where is it my starting point? Figuring out that starting point, I think, is the first part of your journey.
Yes. Figuring out the starting point is the first step in the journey. So, practically, let's say there's this college kid, back in the day, like you, who's now looking at all of this craziness that's happening in the market and he's seeing all the money being minted and he's excited, right? He's excited to jump in. How do you think he should start? Where should he go first?
Okay. So, if you're like a college kid, who's still probably in third year engineering, fourth year engineering, or let's say you just passed out of engineering, the best route for you to do or make something in crypto is experiment. There is stuff that's already built out. See if you can, there are a lot of open source projects, right? The first thing you need to do is you need to learn the stack. Uh, do I work with Solidity? Yeah, back then, in 18, 19 or, 17, 18, 19, if you didn't know Solidity, probably your odds of becoming a crypto engineer were close to zero. But now the thing is, it's okay if you don't know Solidity. There's a lot of front end which happens. There's a lot of backing. Even it could be some Web 2 pure backing which has to happen, or backing without Solidity, writing code. That happens. So figure out where you're good at. Secondly, experiment. Learn something that you can build. put out projects, deploy them. It's okay if you don't get zero. If you don't get one user, it's fine. But first thing you have to do is you have to start to learn to build something. Can I make a RPC call? Some of those very, basic things. Then once you've done that, uh, the way I see crypto is, especially right now or, even in the near future is a lot of it is basically, like your Lego bricks. So when we are kids or, you see a kid with Lego, a kid will never start, from scratch or, you'll not try to redo everything or reinvent the wheel. What you might want to do is you will see that, okay, there are a few things which are already built. Can I combine those Lego bricks and create something first? Because it's easier, you don't have to start anything from scratch. You have a few Lego pieces, you can do that. I'll give you an example. The DPI, or the DeFi Pulse Index, which was built, it was crypto's first thematic index, or first crypto index, which you can call it. It was not absolutely built from scratch. It was built on top of something called token sets. So if token sets did not exist, DPI could not exist. If DPI did not exist, Index Scoop and all the others would not exist. So it was not like, someone decided, okay, I'm doing day zero. So whatever puzzles you have, Lego bricks you have, work with them. If you just work with a few of these, then you zoom out of it, you'll see a few things happening here and there. Like just, I think last week I was reading someone just, randomly scrolling on Twitter. And there's this guy, he says, offering $10 to anyone on Polygon if you send me $10 on Solana. So what he was essentially looking for, he said, I don't want that 4-hour bridge interval or withdrawal time or anything. I want it instantaneous. Can someone give it to me? So my mind immediately said there's an opportunity here to create a P2P bridge sort of something where, you have someone on this network, you have someone on this network. Okay, I just want to bridge it immediately. I have the funds, I'm sending it to you, you have it, you're sending it. The blockchain takes care of itself. So that's trustless. So when you spend some time, a few months, weeks.
It seems to me you need to have a very keen eye on observations. You need to be a great observer if you want to find problems and then work on them as a
Exactly.
founder.
So you look for those trends. If you see something is interesting, then you try to build. And it's okay if you fail. Not a problem. Keep building. Then the next part is go to hackathons. So this is something that, we did not have a lot back then. But now when I'm looking at this, hackathons, especially crypto hackathons, is amazing. If you go to East India, you'll have a great experience. Again, you don't have to build out something in 36 hours. The friends you make, you get an opportunity to talk to people in and around crypto. And somewhere you need people around you who talk crypto, who are those who have that mindset to make it in crypto. And hackathons give you that opportunity. So if you do these things, observation, go to hackathons. I think you have a good starting point.
Yeah. Also, I realized reading your introduction that Clamp is not the first startup that you worked. In fact, in 2017, with your best friend, the same guy who joined crypto before you and didn't inform you, you were working on building a crypto exchange. So it's not been a small journey for you. It's been a rather long 5-year long journey, and people kind of underestimate the power of compounding of knowledge and information, especially when it comes to building a startup. The other day, my wife, she was narrating the story of Elon Musk. She just bought her biography, and Elon did a bunch of different projects. As an 11-year-old, he learned coding for the first time. Then he built a lot of games. Then he sold a lot of games. And then when he moved to finally, I think, Pennsylvania and to the West Coast, his first project, which was at the beginning of that internet era, was trying to figure out how do you take the yellow pages online, right? Because internet was so new. And so crypto is so new, and people don't realize you need to go through that journey of building stuff again and again and again, which really makes the difference.
Exactly. If you give that Elon story, because I've read it a couple of times. So it starts with zero. That is the starting point. A lot of people, sometimes you see the bigger things and you anticipate, it was always easy for them. But it was no. In my own story, when I am someone, who's seen local Bitcoin. It's no longer working, but originally local Bitcoin was one of the original or the easiest ways how you could get Bitcoin. So this is even before Indian exchanges existed. You had
Wow, I don't know about that story. What's local exchange?
So, before even exchanges came to India, okay, Coin DCX is very recent. Then, so most of the ones now are very recent, I think, besides WazirX, which is, I think, the oldest, or Zeppe, I think. So, So one of the
Yes.
easiest ways, to get some crypto directly, or this P2P, which we call it, it was localbitcoin.org. You could place an order, you could buy, and
Oh,
localbitcoin.org was your place to do it. But then again, it was
wow.
extremely tough and, a sort of a mental pain to go through the entire process and do that. So when I was thinking, okay, what could be a rational step to, simplify this, it could have been a crypto exchange at that point. But would I have one of the reasons why I was never able to figure out the puzzle was that according to your fundamentals of crypto, the custody of a digital token should always be with the wallet or whoever has the private key of the wallet, for simple terms. But somewhere down the line, an exchange contradicts that principle, even though you give a simpler UX, but it did not exist then. So I was never able to figure out the technical part, and that idea was just washed away.
Okay, awesome. Moving into your journey into crypto, right? Before crypto came about, walk me through your early childhood. Where did you grow up? What were your habits like? What were your passions and hobbies back in the day? During in school and later in college, what were the other projects that you explored, other industry technology areas that you were interested in before jumping into crypto, and why after all of that did you decide to join crypto?
So, I was born in Mumbai. I live in Mumbai. This is my home here. As a kid, I was a very simple kid. Study, go home. That's like done. End of day. Nothing besides it. The only other activity I had was I was a very avid cricketer. One of my memories is,
Oh, that's something you and I share in
so
common.
it's the thing is, if it's a Sunday morning, if I go down at 8 a.m., I'm not coming home until someone comes down to pick me up. So I had this ability where, I could play cricket in the morning with a very different group of people. I would end up playing with a different group that comes in the afternoon and stays till the evening. So I had this ability. I can play cricket as long as, the sunlight is there. I can play cricket. Cool. So then I think one of the only other strong memories which I have of my childhood is around, I think, my 8th or 9th standard. Where my uncle was, he had finished his MBA and he was throwing away his MBA books or, putting them away, giving it to someone or something like that. And I asked him, why are you throwing this? Because a lot of books. And for me, it had a lot of topics around business, this, that. And I was someone who's always intrigued by, okay, can you learn something? Can you do something of your own? Some sort of that. And I asked him, why are you throwing it away? Can you just give it to me? And I'm not sure what he felt. He just said, okay, but you have to take all of these. And there were like 4 or 5 boxes full of MBA books. And I picked it up and I brought it home. And I said, okay, summer vacations, you don't have anything else to do. Why not we do this? So I just kept reading the books. I didn't understand 99% of it because, of course, for a kid, MBA is very high. But what it did to me was, it gave me that spark that, okay, you can learn something. You don't have to be a certain age to do something. That was very important. Then
and this is when you were 14.
Yeah,
9th standard.
9th standard. That's sort of age group.
Wow. Man.
This. So then nothing beyond it, but I was always very curious, about reading up about Steve Jobs, learning about jobs. In fact, one of the most one of the reasons
I love Steve Jobs.
Because, if you watch that Steve Jobs movie or if you've read about the book, Steve Jobs says that, the reason Macintosh has so many fonts, or the reason, in any of our computers we have so many fonts, is because Jobs decided to take a break here. If he didn't take a break here, he would have never learned calligraphy. Macintosh would have come out with one font, and Windows, which copied Macintosh in most terms, according to him, would have also had the same font. So, very small butterfly effect. But then, if you give yourself the ability to do a lot of things, learn somewhere down the line, you hope it works out as well. So that was there. Then, but I was always curious about computers because in my school itself, we were introduced to computers very early. I think I was taught HTML in my school in 5th standard, probably. So around 10 or 11-year-old kid learning HTML in school, which was not very common, in Indian schools at least. So if you got a head start with a computer, it was beautiful. Where I remember, if you had to do something, you would bring pen drives and you were only allowed to bring up bring a pen drive on the day you had that computer class. Else you're not allowed to bring a pen drive. So you could bring a pen drive, whatever you wrote in that notepad file, you could copy it, take it home, and then bring it back if you wanted to reuse it. So that was the thing. Then when I grew up, I had some passion for coding, coding as in the sense not doing random data science algorithms, but trying to build something useful or, even if it was very small automation or something like that. So that kickstarted the journey then.
Interesting. And moving to your college days, what made you? Were you always clear that you're interested in computers, and so you want to dive deeper, become an engineer, a computer engineer? And what was your experience like in college? What was the atmosphere there? Was there a lot of excitement to get into startups or build products? And amongst your friends and colleagues back then, which kind of drove you into this life today?
So I think, even before I got into an engineering college, I was preparing JW for IITs and everything, even though I did not clear JW advanced, but I was preparing for it. So one thing which I found very, when I look back at it was that, the circle which I had, it was always very ambitious. To give you an example, the kid who sat next to me for the 2 years prep of JW, okay, not next to me always, but in that circle, he's someone who's also a founder. He's been on Shark Tank and he's raised money.
Oh,
So the kind of circle that you create around yourself, that, from a very young age, if you have those sort of friends, if you give yourself an opportunity, you think big, it works out. So when I went to engineering, engineering was sort of a, reality check. It was not exactly how I imagined it to be. You're not building something on day zero. Instead, what you're doing is you're doing maths, you're doing trigonometry on day one, day two, until probably your first year ends. And your actual engineering does not start until second year, where you begin your coding journey or something. At least the college I went, not sure if it works out other ways. One reason why I got into crypto was, because I was absolutely bored with my curriculum. And I'm my friend. So now, you see the timeline will start to match. 2016 Ethereum, about the Ethereum DAO.
Yes.
A few weeks later, I meet my best friend. I start talking about this with him, and apparently he knew already. He knew much more things than me. That piques my curiosity. And a month later or something, a month or two later, I start working with him. So because I had nothing to do, my curriculum was boring. I decided, let's do something which I found interesting. And to be absolutely honest, on day zero, I did not think that I would be spending 7-8 years of my life in crypto. But I thought, this is something, it's interesting. Then, after a week being here and there, I read the Bitcoin white paper. And I felt, okay, this was something that has a lot of potential, and those fundamentals of open finance, decentralization that are being spoken about. This is something that was needed.
Okay. Moving forward in time, in 2017 or 18, 19 perhaps, when you won the Q Fellow, when you were the youngest Q Fellow, what was that about? Take us back through that journey.
Okay. So, after my first job as a shadow content writer, it was sort of, very saturated because, let's be honest, at that age, I did not have that coding expertise to pull it off. I simply did not have that capability to, write good quality code, which could actually be pushed live. So my other options were to explore non-tech as much as I could. So I gave myself that time, that opportunity. Okay, anything that was there on Ethereum, I read it. Not making this up, but in the first, the 2017 ICO wave or something, there were projects that came up, a lot of them. And I used to read white papers, not because I wanted to invest, but because I didn't have anything to do. And I thought, okay, let's read white papers, let's understand what else is being done, built upon, and so on in such cases. So one day I realized that, there's something called as Concourse Q. Concourse Q was a community of Q fellows. So you can call it a DAO before a DAO. It was some sort of a DAO before the word DAO existed. And Q fellows were a team of, I think, 10 or 12, if I remember correctly, 10 or 12 people. And we used to do due diligence on ICO projects that were raising money. So we wanted to weed out the bad players. Like, if someone who does not have a real project, he's just made a fake identity, gave someone $5,000 to write a white paper, and he's now creating a project and, taking money, he's going to run away. Because eventually in the 2017 ICO run, 90% projects ran away with the money. They do
That's true.
close
That
our
happened.
years out. And then we started with this. And I still remember, in that interview, I think I had it with Naseem. And Naseem asked, "How old are you?" And I said, I was
Who is
So
Naseem?
Naseem was, I think he was handling all the Q fellows back then. So Naseem was handling all the Q fellows back then, and he took my interview and he's asking me how old I am. I think I said 16 or 17. And he asked me twice. How much did he say? Sorry, 16 or 17? Because we've had the entire conversation. We spoke for 40 minutes and I gave him, what I know so far, what I've done. And in the end, he asked me, okay, how old are you? And I said, I'm 16 or 17, I think, around. And the guy did not believe it. So nice journey at Q. Then we were doing all of these projects, and we did it until the end of the 2017 summer bull run. We were there throughout. We had a lot of bad players, and we did some good work for the community.
Exciting, exciting. So there's been a lot of different hats that you've worn, technical and non-technical, which is, taking a step back, guys, an interesting way to think about your own journeys. If you don't know tech, that's not the end of the road. In fact, that's a great place to start because now you're literally with an open, blank slate. You can start diving deep into existing projects, existing solutions, go through white papers, and there's a ton of them available. And now, of course, with crypto Twitter, there are many influencers and content creators. Of course, you have to separate the wheat from the chaff, but that's also a talent that you need to kind of build if you build that muscle as well in crypto. But great journey so far, Abhishek. Um, Now coming to your moment of epiphany in crypto, I realized this was right after the DAO hack. Talk to your best friend, and then of course Concourse Q. There was no. What I realized is there was not one moment that led you to explore crypto. There were many smaller moments in your life back in the day during your engineering that pushed you into this space. And I think it all ties back to your early years, your childhood when you were a curious kid, and borrowing those MBA books from your uncle really opened the doors to thinking about business or being more curious about things that you don't know anything about, which is great. So guys, be more curious and have an open and learning mindset and play long-term bets, isn't it?
Absolutely.
Yes. Okay. Awesome. Okay. Now coming to the exciting stuff, coming to 2023, let's talk about the present. Crypto ecosystem is kind of going crazy. There are new things always on the table that you need to learn, right? I know people who keep changing their minds about things that they used to call like completely write off. I know people who would write off BTC. I know people who are today writing off Ethereum for other blockchains who they think are gonna like take over the world for whatever reasons. I know people who are writing off memes and community, but we know as industry insiders, all of these things put together make crypto what it is today. So, what are your thoughts on, what excites you most about the crypto ecosystem? Is it the people, or the memes, is it the banter that happens or, the Degens and all that craziness? So what's the most exciting thing about crypto for you in 24? Sorry.
So, like earlier in the podcast, also I said the most important thing, or, the most fun thing about crypto is people. It's okay, if you don't like a few things in crypto, fine. This is not the freedom you get in Web 2. If in Web 2 you criticize something, they hold it against you. And then you meet them,
Yeah.
they'll be like, oh, you said this about me, or you said something bad about this stack, which is very close to me. In crypto, it's okay if you're an Ethereum maximalist. It's okay if you're a Bitcoin maximalist. Fun thing, if you see these people at a hackathon, in most cases, not saying in all cases, in most cases, they're good friends at hackathons. They know each other very well. They meet each other. They have discourse, they have disagreement, but they always have this mutual respect. Eventually, in the end, crypto is the winner. If some chain works faster than the other, crypto is the winner. If someone has lower gas fee than the other, it's fine. So there is a chain that's the winner. Eventually, crypto is the winner because that is the network that brings more users. And in the end, what we're all working towards, the common goal remains same: decentralization in finance.
Mm.
And you want people to be on crypto. So people is the most
Mm.
important part. Then in 2024, especially, what I feel I will see is that this aspect where, one chain writes off the other, someone writes off some product. I think the worst thing to do in crypto is to write off someone. You cannot write off someone because crypto is something that, in 2 years, it can change on its head. A stack which is live today can probably be redundant within the next 6 months. And you'll have to redo everything from scratch, learn everything from scratch. From my own experience, when we built out Clamp, even though, Clamp does not have versions explicitly, if we had versions, we would probably be V3 or V4 by now because we've had to make so many
Mm.
changes.
Wow.
When account abstraction went live, we were very certain. So, this example I gave that the first time I wanted to build a crypto exchange, the technology was not there to, give users the ability to own their assets without having the hassle of creating a private key, managing the entire wallet. When account abstraction went live, I knew I had kept reading about account abstraction. In fact, when I went to ETH Global Tokyo, I was fortunate enough to meet one of the writers of the white paper of ERC 4337. And I was able to exchange a few thoughts. I was able to tell him that, I'm trying to build something, give him my ideas. He was able to give me a few advices here and there. So when account abstraction went live, what we started out was very different. Then we were able to offer that to users. Just enter your email address, everything is managed. So then what happens after the Denkin upgrade with 4844 going live, we are deployed on Polygon POS. Doesn't make much difference for us, but someone who's probably on an optimistic L2 rollup, for them it's going to make a lot of difference. So how will that work out for them? So you have to always be learning, be curious. And in this 2024 cycle, I think you have to be fast enough. You have to learn a few things, forget the old ones, pick up the new ones.
I see these days AI tokens pumping quite a bit, right? So again, it seems to be a clear case of trends investing, which is what crypto is all about. That's what Degens do. But if you were to look at these emerging narratives in 2024, be it RWAs or AI or deepen, gaming, of course, was there, but now we're looking at fully on-chain gaming. We're looking at ZK for privacy and scaling. So, bunch of new initiatives and narratives have come up in the last 2 years in the bear market that we were heads down building, and now in 24 we see many of these kind of pumping like crazy. So, if you were to bet on any of these narratives for the long term, like for a 3 to 5 year cycle, which ones do you see evolving the most from the perspective of real world adoption?
So, before I give you one name or, an order in all of these, I think whoever wins eventually will have figured out how you abstract all the blockchain level complexity from your end user. So you give them a UX which does away with all your blockchain level complexities. And second is you make most of the transactions or most of your interactions are on chain, but the user does not realize he's paying gas or he's signing each of these transactions. We've had this, every cycle we've come up with something. We've tried to make it simpler. This time for cycle, I think, is when you finally go closer to, or as close we've been to realizing this dream. On the order of, which one?
Abstracting the complexity of a blockchain for an end
Absolutely.
user.
Because, let's take this gaming example. If I'm a gamer, I do not want to be signing transactions for each move I make, let's say. It's not.
Yeah.
Does it make sense? If I'm playing something,
Yeah.
I want to be focused in the game. I don't want to be
Yeah.
focused on signing transactions. So unless and until I can offer that seamless experience, I'm not getting users. In real world assets, I think, RWAs have probably been very early, in your Ethereum DeFi use case. If you see, RWAs have existed for a while. Now, the problem with RWAs is there's a lot of regulation that goes under the hood. So it's not very simple, like, you regulate a real world entity and then you do it. It's simple. If it's an art project, okay. If it's something which does not have a lot of financial value in real world, fine. But once you start moving into, let's say, you're tokenizing securities, there are shares of a company which are listed on the
Definitely.
blockchain. Now, this could be a very good RWA use case where, especially, if you do not have instantaneous settlement times or you do not have near instantaneous trading hours, what this could do is this could give you 24-hour liquidity, a lot of this. But then it's such a heavily regulated market that you cannot build inside it unless the regulations are friendly enough for you to build. And then there's deepen and AI one. So the AI aspect, which I see as we're all humans, and our human tendency is we want to make money. So in Web 2, it's the same. You call them penny stocks. In crypto, we call them meme coins because they give you this opportunity, that, oh, if I made 100x, if I made 1000x on this is what I'm going to do. It's okay. We all know it's not going to pump. But what we are giving ourselves is we are giving ourselves this opportunity, or this optimism. Optimism is a drug, which I call it. Optimism is the best drug. So as long as you're optimistic,
You know, yeah, yeah. I don't think memes are that they'll disappear one day. I think they are fundamental and central to how we have always looked for opportunities to make a quick buck. And with crypto, it's just it looks like it's on some kind of steroids, but it's always going to be here.
Exactly. See, I'll give you an absolutely real example. Okay, the Airbnb founders have a very famous story that when they ran out of money, they decided, they're gonna repackage those cornflakes boxes, or your snack boxes or something. I think they're cornflakes boxes, if I'm not wrong. And they made it into Biden and I think Mitt Romney were the two presidential candidates in 2008. So they make Biden and Mitt Romney, and that's how they make money to survive. That's your Web 2 behavior. Now in Web 3, your meme coins are literally called Joe Biden and Donald Trump on Solana.
True that.
People are betting on who's going to become the president by buying those meme coins.
Yes, interesting. So it's a lot of community social signaling as well. That's coming out as a result of this. Interesting. Okay, one big pushback that the traditional mainstreamers have against crypto, and this includes a lot of traditional VCs, a lot of people in fintech today, a lot of people in the government, not just in India, like around the world. It's that there's really no real world use case for a cryptocurrency or crypto. Hmm? What's your take on that? Where do you stand on this divide between there's it's just all speculation and there's never going to be a real world use case versus no, there's like solid opportunity to disrupt a lot of existing services? Because I know back in the day when internet started, it started with everything that we have available in the physical world. How do we take this to online, right, to the internet? And that was the journey to e-commerce as well, and to yellow pages and many other solutions as well. Do you see a similar behavior in crypto? Like a lot of these Web2 solutions, I see a lot of teams trying to build email solutions and communication and commerce and gaming, everything that exists today in our traditional software stack on chain. Do you think is that the right approach to thinking about real world solution? Or are the naysayers just trying to shut down without any solid argument here?
So, one thing which even the builders, I think they have to realize is I have this slide, which I have when I was thinking about Clamp, I made a few pointers, and the first one was what not to do: search a problem, looking for a solution. So where I have the solution, now I'm going to go look for the problem. Where I'm saying, okay, I'm creating Web3 for X, Web3 for Y. Do you actually need that, or do you not need that? Builders have to first think about it, and if there is a potential for it, then you start building. The second part where you feel crypto does not have a future, you have VCs who say crypto does not have a future. If you feel like, if there is someone who says crypto does not have a future, I would invite them, you talk to someone, let's say in West Africa or Nigeria. Chances are, if the person has Twitter, if the person is using internet, you shoot them a DM, they will know about crypto. When I was doing my own user interviews for Clamp, before Clamp, after Clamp, we've done this so far. I was surprised by the rate of crypto adoption that people in Nigeria had compared to what I've seen in other geographies. They knew what is a stable coin. They had crypto on an exchange. They knew how to use MetaMask. So a lot of these steps, which we look for, if you're creating a product, you might want to understand Does your user know how to use an external EOA wallet, which you call a MetaMask or something? So there are people who do this. And the best part, people in West Africa actually use crypto day to day. They've created a closed economy for themselves where they are very open to using crypto because the local currency keeps on devaluating. So I feel, there's a trifecta which has to happen in some countries where crypto works very well, which is your local currency is devaluing day to day. If you do this for the Nigerian naira, you see this happening. The Nigerian naira devalues a lot very quickly. The second is your local government is not stable. So that's the two of the three. Then the third is because your local government is not stable, your local economy is also not stable. So as a result, people start looking for jobs, opportunities, so that they can work outside. It's okay if they are based in the state or city wherever they are, but they can work for someone outside, they can get some
Right.
money. So as this entire crypto economy started moving in Nigeria or in West Africa alone, this has created a loop for them. Personally, the VCs I've spoken to, at this point, I've spoken to VCs across multiple geographies. One thing which I've found common in, there are VCs who are Web2 VCs who look to do Web3 investments versus there are people who do purely Web3. I think Web2 VCs who look for Web3 investments are opportunistic VCs. They do not understand the stack. It's fine. Okay, you don't understand the stack, no worries. But, they might be interested. It's very simple to how a normal user behaves during a crypto bull run. If it's a crypto bull run, okay, I'm interested, give me your idea. If it's a bear market, even though if you go with the best idea, probably because, fund might
Yeah.
not agree or whatever, his new thesis might have popped up, he'll say no.
Yeah. Yeah, we saw that happen in after the once the bear market kicked in. It was like 95% reduction in VC funding, and to be honest, it was true across the base. Not just in with Web2 VCs investing in Web3, but also with Web3 VCs. Like barring a few, almost all of them stopped writing checks.
Correct. So, for Web3 VCs, you can understand because they do not do any Web2. So for them, Web3 is everything. So when it goes down, the entire fund performance goes down. So eventually, if you have LPs, you have to look after them. Your LPs will tell you to be more careful with capital allocation. So like that.
Yeah, true that. Okay, awesome. Now, now we're in the with the bull run back. Retailers are once again excited. I was seeing this news that Coinbase was down for some time, right? So clearly there's excitement now with BTC at 65K and no 66K. What's the latest price there? There's a lot of discussion happening in our group as well. So, what's your assessment of retail audiences' participation in this cycle? And adding on to that, I think in the last cycle, their entire presence or most of the volume was captured by centralized exchanges, right? How many do you think will try crypto native solutions for investing or for trading, in this cycle? Or do you think the majority of volume and users would still be occupied by the likes of Coinbase and Binance?
So, if you look at what happens in 2024 and beyond, let's say, these 2 years at least, even though, crypto exchanges might not be following your core fundamentals of decentralization, open finance, but one thing they've done is they've cracked the user experience very well. They make it seamless for anyone to get started and buy their first crypto. So what happens in crypto is, even I think in the 24-25 cycle, what you'll see is people who buy their first crypto, either they earn it from somewhere where, you've created some value, you work for something, you're being paid in crypto. That's one way you earn crypto. The second is you go to an exchange and you buy crypto because they've solved the user experience and the on-ramp problem, which, let's be honest, a lot of DeFi projects are still yet to figure out how will our on-ramp look like, or how do we figure this part out, or what is the ideal user experience where you can replicate the entire Web2 seamless or the smoothness in Web3. So exchanges, again, they continue to dominate, but the percentage or, the market that they have shoots down. Earlier, if you see, a user comes to Coinbase, Binance, that's his entire user journey. He might create a wallet on another exchange, but he's not doing anything beyond it. But now what happens is when a user comes, he'll have Coinbase, Binance, he'll see this for a while. Then I have noticed this. The users who are new, they start to look for what other options do I have. So if you sort of introduce them to DYDX, If you are interested in someone who wants to do margin trading or futures, introduce them to DYDX, they'll pick that part up very well. So they still need a helping hand, but the percentage of, our pure DeFi projects, which will keep taking the mature market chunk, that will of course keep on increasing. And I say this commonly to my friends. We are only in a bull market when Coinbase starts going down. We are not there before.
Amazing, amazing. Now, are would are do you think these retail investors who are now looking at crypto? I know a lot of this behavior is short term. Many of them will exit when the market goes down again, which is kind of surprising because I think the most fundamental way of making money is buying cheap and selling at the peak. But market behavior is reverse. Mm. Do you think many of these retail investors, they will stay back this time around? Do you think we will increase the market size of crypto overall?
So, very importantly, what we have to do is what I see right now is, you have this perception crypto investment is gambling. The day you're investing in a crypto, you come to an exchange, you've already come with half the mindset that either I'm going to make 1000x or I'm going to go home with zero. So again, which is not the right set of or the right kind of mindset that you want people to start with. Like you say, people.
Is it because of lack of education around
Absolutely,
crypto?
100%. Now, one of the biggest problems for people is when I was doing these user interviews, I'll give you an actual example. When I was talking to people trying to understand their crypto problems in India, I met this one person. 99% of his crypto holdings were in Shiba Inu. Ask why.
Why?
What he had done was that he went to Google. He said, okay, best crypto to buy in 2021. And I think some paid link popped up and it took him to some link and it said Shiba Inu is the best coin to buy. It will give you 1000x. I mean, this person is not, it's not that, he doesn't understand or something. He has a computer science degree. So if someone who's a computer engineer can get fooled, then God forbid what happens with the normal audience. So that's the thing, we want to introduce them to crypto investing in a way that, okay, you have to do sensible, small ticket size investments, put the
Yeah, I mean, just the way they think about stocks, they're always thinking about, okay, what is this company doing? What are they building? What are they selling? What are their margins? How much debt do they have? We ask these fundamental questions when we're trying to buy a stock, but nobody is trying to lift that wheel and look beyond, trying to see what exact the heck is this crypto project have been trying to do? How do they create accrue value to these tokens? Nobody cares.
Exactly. That was the entire 2017 ICO bull run. ICO projects take money,
Yes.
don't build anything, go away. And I'm pretty sure that in 24, 25, we are probably going to see the second wave of ICO projects. Because with account abstraction and all of this, it becomes so simple to create a crypto project that you will have a lot of projects suddenly pop up. And now you can create a token easily. You can, market it or you can talk to users, crowdfunding, and then do it. So we'll see another second wave of probably ICO projects also.
Now in crypto, one of the dominant market segments or user segments are Degens. Every new project that launches in crypto, a Web3 native project, pretty much targets them as their fundamental user. Now, for a project like Clamp, which is trying to create long-term investing opportunities for users, how do you see this? How do you see these two different market segments, the DJs and the retailers? And do you think there's a pathway for existing projects in crypto to go beyond DJs as their target audiences, and for Clamp, are DJs an interesting market category? Also, on that note, how would you define a DJ?
Okay. How do you define a degen? A degen is someone who has Twitter 24/7. They probably have 2, 3 pseudonymous or anonymous crypto accounts. And they've lost a shit ton of money, but they'll not tell anyone. They'll hold some NFT from the original first wave, which again, they'll not tell anyone because he's probably spent 1 ETH on that NFT and it's not holding any value. And 1 ETH at $4,000, he's going to take a big hit, of course. So that's a degen, someone who's been for a long while. Now, interestingly, for projects which are crypto projects, why do they go for degen? Just fundamentally, if you see, degens are people who know crypto a lot. So let's say, if I were to build out a perpetual exchange or something, let's say, futures exchange, it's much easier for me to target degens rather than to go with someone who doesn't know crypto yet, or who knows crypto but he doesn't know it that deeply. There is nothing wrong in this. Eventually, if you're a VC backed product or a project, you want to show numbers because that's what is expected out of you. So if I create
Hmm.
a futures exchange where I can offer 100x leverage, what it does is I have degens who come onto the platform. Even if this person puts up $100 of his capital, takes a 100x position, I can now show $10,000 of trading volume. So I can easily achieve those numbers. So that becomes a low hanging fruit. But then what happens is you're only inside that close community which you've created. So a new project comes up, only degens can try it. No one, probably your normie people cannot do it. So they sort of get segregated. Your degens shoot up another IQ. If you create a leverage product with some sort of, index product flavor on top of it, again, crypto degens catch it very quickly. Normal people can't. So the more difficult things to do, this is also very classic YC advice. You have to do the hard things first. You just cannot say, I'm gonna build something easier and expect to take everything. If you want to build some very strong underlying value, if you want to ensure that you get the next set of crypto users, not putting a number on it, it could be 1 million, 10, 100 million, 1 billion, whatever the next set of crypto users is. But if you want to ensure that you are the person or you are the project that helps create this, turns this around from crypto is gambling to crypto is sensible investment, you have to do the hard things. And the hard things are someone who's coming to crypto, you give them the right mindset, you give them the right advice, you channel them in the correct direction rather than this person. I'm not saying, don't buy meme coins. Buy meme coins. It's your money, have fun with it. But then again, do not expect to make money on meme coins if you're doing it. So if you're someone who only comes in crypto during a bull run, wants to invest in meme coins, hopes for 100x, you're probably going home with zero. Because there's a crypto degen on the other side who knows this behavior very well. So you're going to go with zero. But what you did was, if you invested in crypto, let's say 3, 4, 5 year periods, and you said, okay, I'm going to come back 6 years after this. Look at it. You would have probably made money, which is very simple. I received this advice way back, I think, and I'm guilty of not following it. The advice was that, whatever crypto you have, put it in a wallet and copy paste the private key and put it in some locker. Don't open it for 5 years. If you don't have access to that wallet for 5 years, you'll not sell and you will have money.
You'll be good.
That's actually, the best advice in crypto to not.
Legit advice, bro. Legit advice.
Yes. So the best advice in crypto is to not do a lot of things, just to take it slow rather than trying to, do a lot of things together.
Awesome. So degens are important. Degens are important because that allows you to have that first set of users in power users who will teach you a lot about your product, who will use your product. But I think on the flip side, and then that's just my observation in the market, this is also mercenary capital. So, I mean, you can't rely on it for sustenance for a long period of time. Obviously, you will have to build a product which eventually has those users who are going to stick around. So that's also as important as targeting these early set of users and, getting that upside that you can with them.
Exactly. So, if you just want to do something for numbers, you want to target crypto degens, offer someone 16% yield. On the other hand, give them 200% of the collateral value that they can put. You will do $10 billion in volume in 1 week. With that value. It's not
True that.
value.
True.
So that's the thing.
Yeah. Okay. Moving into the last leg of this podcast, I want to now dive into Clamp. So my first question to you is, I think you started building Clamp as early as 2021, if I'm not wrong.
Some part of 21, 22, correct.
21, 22. Okay. Now with Clamp, I think the basic value proposition is you're enabling investors to play long-term bets in crypto through an index solution. Like, walk me through this problem statement. How did you discover this was a problem worth solving, and why now? Why do you think now is a good time to do
Great.
it?
So, see, I'm someone, who has only done crypto his entire life. Because I was so early introduced to crypto during my engineering, I spent 3.5 years just doing this. So when I got out of college, I did not know anything else besides crypto a lot. Then I tried to dabble, create my first startup. So I also did one Web2 startup, did not work out well. It was a prop tech startup. And I spent some time around, it not work
Mm.
out. Then I was like, okay, let's try to figure out what am I good at personally. And naturally, I was only good at crypto because that's what I've done so far. So I started talking to people. I started, just randomly meeting people. And I read a lot of Vice, to try to get as much as genuine advice as you can get. They have some authentic advice and some harsh words, but the correct words. So I started, reading YC, learning about it. And one of the first things I read was this Eric Michkowski, he's giving a talk. He's giving you the importance of how to do mom test, how to go correctly talk to user. So after watching and reading all that, I started talking to people, very random conversations, meeting someone for coffee, meeting someone here or there, talking to them.
Mm.
And this part was a crypto bull market. It coincided with the 21 bull run. So people who are naturally curious in crypto, I would talk to them 10, 15 minutes, here and there. And the conversation would automatically turn towards crypto without me forcing it. And I found that, okay, what is this person interested about in crypto or what does he not understand? I used to search about it, bring it home, write it on a whiteboard. I had a huge whiteboard, write it down, okay, few bullets. Then I started doing it more. And I did this, I think, for 6 or 7 months. 6 or 7 months, nothing. Just doing this, talking to people randomly, seeing if there is something that can be built. I wanted to be absolutely sure that there is a gap here. Not just, build something half baked or not do something, not enough research and just do build something. And I should come home, bring then two things which I found common: lack of education, people did not understand crypto. Second was the most important statistic: 90% of those interested in crypto never actually got started in crypto. So that was my aha moment. That, if there is a number, 90% do not understand crypto, want to get into crypto, how will they get into crypto? And in India, at least, we have this very specific user behavior that, people invest into the equity market with SIP in a mutual fund. Why do they do it? Because it's easy. They don't have to read the financials of a company. They don't have to read the financials, check the quarterly earnings, what is the result report, nothing. They've delegated it to a mutual fund house probably. So it works very well for them. And one of the things we've seen in India is this is a trend in the last 10, 15 years. If you are in an Indian household, probably in late 90s, and you went to your father to say, I'm doing stock market investing, your father would slap you because that was equal to gambling at that.
True.
Exactly. Yeah.
My father never invested in the equities market, never ever, and I was like, I'm flabbergasted.
Exactly.
He missed the greatest bull run in the history of India's financial
Exactly. So,
markets.
that's a trend which has existed. And, I'm a very strong believer in that, that trends play out, cycles play out exactly as they did, just with a new product, a new stack, but they'll do. So, if in Web 2, in investing in the equity market in 90s was the same as crypto investing is today, how did it become simpler? How did it become easier? It became easier because you were able to create financial products where you offered them SIPs, you offered them mutual funds. But something did not exist in crypto yet. But when I say exist in crypto, I'm not saying, you create a custodian, you take people's money and then you invest it somewhere. It had to be done according to your fundamentals of crypto. So, which was, initial attempt you could say was the DeFi Pulse Index, the DPI. And now, mind you, here, so, Concourse Q rebrands to DAPT. DAPT becomes DeFi Pulse Index. So this is where I felt like, I bought that domain knowledge from 6, 7 years back, where I had learned about how an index token works here at least. And now I could execute it. And I saw that, account abstraction 4337 was on the horizon finally. It had been in the works for 3, 4 years under multiple names, different ERCs and all of this. But finally, it was going to be live. So I could see that, okay, there's a market trend that's shaping up where a user will be able to have a crypto wallet without having to go through the private key hassle. And another thing, my best friend still buys Bitcoin separately and Ethereum separately and holds them on those chains because he doesn't trust the crypto exchange. And he's been doing this since I think 2014, 15. So that was the exact behavior that I wanted to bring in, that, you have to have your crypto indexes also on chain. You cannot have them off chain. So that's what we tried to build out. And that started our journey.
Would you say you're directly competing with these big ticket centralized crypto exchanges? Because I think that's the typical user behavior there. People go to those exchanges to buy crypto, even if they want to hold it for the long run, right? Like there is the small tiny fraction of their users who do believe in keeping these tokens for the long run. They are true believers in crypto. Do you think like you're going head to head against them?
So, I tell you this one thing. I get this question a lot. How are you differing from an exchange, or how are you differing from a DeFi exchange or something? I have a simple solution which I give you everywhere. A crypto exchange will push you to trade. Clamp will not push you to do it. In fact, Clamp will push you to buy once and then not open Clamp again for another month. So that's the fundamental difference that you want to have. You buy it once on Clamp, don't come back till the next month to buy something new. You've done what you had to do. So create that fundamental difference. And we are not pushing you to do futures, exchange, nothing like that. One simple product, you put your money in index.
I'm sorry to cut you, but one thing that's from my little tiny head that has to be true for Clam to be super duper successful is you need to be able to convince users to flip a switch in their head that crypto is here for the long term and that it makes a lot of sense. And clearly, people who would have entered the cycle in 2011, 2013, 2014, had they moved their money into a crypto wallet and just threw it away into some kind of a back burner and never looked at it again, they would be like in the green all the time in the last decade. It's been the best performing asset category across all asset categories. So clearly there's no doubt that there's long-term value. But that also seems to be the fundamental challenge. So when you look at this market, what's your hypothesis like when you think that flip is going to happen in people's head when they will start looking at crypto as long-term investing opportunity rather than short-term money making 1000x bets and gambling?
So this mindset switch that I'm talking about, you'll be surprised. Okay, I'll give you a real example. What user niche do you think constitutes the biggest percentage of Clamp's user base? Let's say, I'll give you three options: absolute novice users, people who've been in crypto once, or Degens. Which one do you think has the biggest chunk?
I think it's going to be
I'll tell you.
A or B.
So, the highest proportion of crypto users at Clamp are people who've been in one cycle before and they've lost money. And they figured out that, the approach that they had the first time did not work. So now the flip has already happened in their mind. They've made this switch and now they're coming and doing it the right way this time. So we are not trying to change your user behavior, but we are giving them that alternative that, if you want to do long-term wealth creation in crypto, this is a better way to do it.
So it's that self-learning has already happened through the last cycle and they're missing out that journey, that upside that you need to stay in and stay invested for a longer duration in order to make any money out of this space.
Exactly. And that can only come with experience. Yeah. Unless or until you've been in one cycle or you've seen someone burn their hands directly. Only in those you can see like that.
Okay. Okay. Now, one selfish question because I work with Polygon Labs. But, I will wear my hat as an analyst as well because that's how I look at the markets. We've been having this discussion on and off as well about how so many L1s and L2s are there in the market, right? Every day we see a new announcement. Every day there's this new chain that's coming up. And in my head, I don't see any like clear cut differentiation amongst what is already there in the market. But, given where we are today, why did you choose Polygon as, one of your foundational home base for Clamp? What is it? What's your favorite thing about this chain that separates it from all the other scaling solutions and other L1s that could have been Clamp's home? So what is your take on the blockchain fundamental ecosystem and what makes Polygon, a bet worth playing for founders like you?
So, I've actually, seen Polygon's journey from Matic Network. originally also. So
Mm.
one of the things was, when I started to building Clam, what options do you have? Or, if you're someone who's a new builder, what options do you have? Uh, when I was still working with Clamp, you had a lot of chunk of, or, a lot of noise around rollups. Rollups this, rollups that, L2s this, L2s that. But then there are a few things which are absolutely important, and I'll give you the harsh truth. Eventually, does your user actually care about which network his transaction is on? In most cases, I think 50% cases or more than 50%, a user will not explicitly care about which network the transaction happens on. What does he care about? He cares about speed, one, most important. If you're creating a transaction, it has to go through instantaneous. It becomes even more important if you're doing DeFi, on chain gaming, where your transaction has to go through immediately. You cannot say, oh, give me your money, I'll come back after 10 minutes. Harsh truth, but doesn't make sense. I cannot have a 10-minute waiting period for a user to confirm the transactions. The other thing is it has
Mm.
to be cheap. You cannot expect a user to pay $10 in gas for a $10 transaction. Doesn't make sense. Again, another harsh truth, but if you go out to mint a index token today, mint, not to transfer. I'm saying if you have to mint an index token from scratch today on the mainnet, Ethereum mainnet, you will end up paying $65, $70 in gas fee. I think it might be even higher right now, giving the
God. Yes.
so, so
Totally
how can
yes.
you take this and explain to a user and understand the next wave of users where we are getting it from? These are 3 or 4 markets: Southeast Asia, the ASEAN belt, Latin America, and West Africa. So these users are your consumers very conscious about the gas that they pay, about the fees that they pay to the network. So in a few of these markets, Ethereum mainnet directly does not work. What works best? Polygon works best for them. You go talk to them in Africa, you go talk to them here or there, you'll see Polygon has a higher adoption. Again, not saying this because we are deployed on Polygon or we have a grant from Polygon. But even if we take our example, we got the grant a month ago, but we've been live only on Polygon for about, let's say, 7 or 8 months now. Not even 7, 8 months, I think even longer than that. Why is it only so? Because when we were building out, we had offers from other L2s. We had offers from other L1s to, build on their chain. But why did we not choose it? Because we knew that, even if a chain offers you $30,000, $50,000 in grant to build, it is not sustainable to build on that chain. It is not sustainable to continue the development. Will a user easily be able to come onto the chain? Does he have all the options available? So when you look at all of these things, and especially now with the ag layer coming into
Mm.
place, for a lot of these projects, Polygon will become the natural home. Or, and if not, then you're always looking at a ZK rollup.
Yeah. You mentioned you had interests from other chains as well. And, there's no dearth of, let's face it, let's be honest, there's no dearth of grant opportunities across the ecosystem itself. You recently were one of the 6 teams selected for the Polygon Village Grant Program. Can you walk me through what your thought process was when you applied for this program? And what's been your experience so far? I know we've spoken quite a bit, but just for new builders out there who are thinking about exploring new ideas and thinking about which chain to go to, walk me through your early experiences of the Polygon Village program.
So, in my case, because I was already deployed on Polygon, I had done a lot of research, which chains you pick, what is the underlying stack. So, I'm not sure if builders today go so deep into it, but you have to also understand what are the fundamental differences between a ZK rollup or a ZK proof rollup or a Validium rollup or an optimistic rollup. If you're a new builder, please do it. So it's going to be very important for you to understand this fundamentally. Now, the thing for me was that I think when I went to Polygon Connect, I heard Sandeep say that, if you build 100 crypto unicorns in India, we can bring more crypto friendly laws in this country. And I think that was my aha moment because, before that, I'm talking to VCs outside India and they have this common problem. Hey, what's the regulatory environment right now? Is it very anti crypto? Because I think some law had come very recently. And we ended up creating this, cloudy mesh that no one knew what the regulation exactly looks like. And Sandeep said this one line, and it was very stark, that, okay, if this can be done, we should do it. When I heard about the Polygon Village program, more importantly, I found that it has that exact perfect track: passive investment, mobile app using account abstraction. So I found that, okay, we are doing passive investment. We built an account abstraction. And not even kidding. I just felt that, that was a track.
All stars aligned.
I felt like, okay, I might have probably spoken to someone and there was a track exactly which fits my use case. And I wanted to apply because I was motivated by the fundamentals of Polygon as a network. I had heard Sandeep speak. In fact, I've also met Sandeep a couple times in person. I've met him. And then I reached out to you and we did the entire application process. So for me, it aligns perfectly that, what do my users want? Do my users get value? Do they get the fast transaction or instantaneous transaction at dirt cheap gas fee? They get it, yes. And for users who come to Clamp, they don't even have to pay that dirt cheap gas fee because we've used paymasters and gas sponsorship in place. So in our case, absolutely free.
That's amazing. Amazing. Now it brings me to the last section and the most fun section of this podcast. It's the rapid fire round. So I'm going to ask you a bunch of different questions. I'm going to give you short options and I want quick answers.
So
Are we ready?
Done. Let's do it. Okay.
My first question to you, what's your go-to crypto, BTC or ETH?
Bitcoin.
I want to spend a little time. Why?
So
you're building in the Ethereum ecosystem, so why not? Why not?
I tell you why BTC or ETH, because I see BTC as store of value. For Ethereum, I see Ether as more of something that you use for the gas, to pay gas for the network. So again, Ethereum might shoot up, fair enough. But then as a store of value, I see BTC as a better store of value. Ethereum has better functionality or the entire infrastructure for crypto.
Awesome. Who is the biggest innovator in crypto? Satoshi Nakamoto or Vitalik Buterin?
Satoshi, I think, because, even Vitalik read the Bitcoin white paper.
Rank these narratives in order of their probability of winning big in this cycle. AI, RWA, FOCG or fully on-chain gaming, or ZK, which includes scaling, privacy, identity.
Okay. I think AI because, trends work very well in crypto. Second, ZK, anything, everything ZK. Third will probably be RWAs. Fourth, on-chain gaming.
Amazing. Which team or founder in crypto do you admire the most and why?
I'm not sure if a lot of people know about this. There's a project. It's called Join Fire on Twitter. The project is Fire. The tag is Join Fire. So if you're someone, who's been signing a lot of wallet transactions, EOA signatures, you get this hex code. You can't read it. Join Fire, you install the extension. It makes it simple for you to understand what you're signing.
Interesting. Okay. If you woke up tomorrow and found yourself to pay Vitalik Buterin, what's the first thing you will do?
Very interesting. I would, what I would actually do is,
come on, man. Is that hurt?
No, something fun. What I would do is, all the meme coins that I've received on my address, which people thought they've burnt it, I'm going to send it to an exchange and sell it all. Just for fun.
Okay. The first word or phrase that comes to your mind when I mention the names of the following cryptonians. Okay. Bankless.
Education.
Ethereum.
The main layer of everything, or you can say the layer of everything.
I was going to think you will say ultrasound. Sandeep.
India's crypto poster boy.
Pac-Man.
Extremely smart because he played out the trend very well.
Awesome. With that, we're at the end of the rapid fire round. How are you feeling? How was this podcast? If there's one big takeaway for entrepreneurs interested in crypto, what would be your parting thoughts to them?
So, one thing, which if you want to take away from the podcast for young builders, the only thing I would tell them is don't force yourself to do a crypto startup. It's fine. What you want to actually end up doing is you want to build a lot of things, go to hackathons, experiment. The first time you build something, you're not going to crack it. If you crack it, amazing. But if you don't crack it, don't feel bad. Give yourself enough opportunity, observe a lot, learn a lot, look up to people, learn from people, learn around. Experiment, go on different chains, see what's working, see what's not working. find the genuine product gap, then build your out hackathon.
Amazing. That was a great conversation. And on that note, Abhishek, I want to thank you. You've been a great guest. Lots of amazing answers, lots of insights and nuggets of wisdom. Although you're very young, you have incredible maturity. Something that I've personally liked a lot about you. You're great to always chat with, and it's always fun to hang around with you.
Thank you so much, sir. Because Rohit, you've been a great supporter for us. Personally, also, when I reach out to you, I talk to you. Thanks for inviting me for the podcast, answering my texts, my calls at random hours of the day. So I appreciate it because, crypto, very small community. We are very few people who have to look out for each other. So thank you so much, man. I had a lot of fun on the podcast.
Awesome, bro. That's a wrap, guys. Looking forward to have you guys again on the next episode with another founder talking about what it takes to build and scale a startup in Web3. Thank you.